Good afternoon. Tuesday, the 5th of March, 2024, and we have new Bitcoin all-time highs. Well, we had them for a short second. We subsequently traded down 5% in pretty much a straight line, but there are new all-time highs nonetheless. We're going to have to celebrate that a little bit. We have an awesome show today. We're going to move away from price a little bit, and we're going to talk about what's happening in ecosystems from a building perspective, which I think is far more important as we zoom out and looking to the space longer term. We have a very special guest that's just got back from Denver, who is going to help us go deep on base and give us a rundown of some of the most exciting things that are happening there. And we're also going to cover David's recent report on USDC, an increase in TVL across DeFi, NFTs having record sales, and of course, we're going to run through some of the nuts and bolts around BTC, its significant price move up this week, and some of the dynamics at play behind the ETF, and also just some of the interesting points of market structure around funding and futures open interest, all of these things that are super, super important when you're trying to figure out what the next move is. As always, we're also going to cover some macro. We have some important data on Friday and also important next week, which is going to help us understand what the rate path looks like going forward. So a ton going on. And we have another special guest who's also back from Denver, David. David, how are you doing? I know last week was a very tiring one for you. How was the vibe in Denver? Was everybody super bullish? Were they bearish? They're looking for risks? Like, how did everyone feel?
Yeah. So this is actually my first ETH Denver. So I got to hear from some of the OGs in the space who are talking about this ETH Denver compared to last year's. And it was nice to kind of see the juxtaposition because a lot of people were talking about how the mood was so subdued last year. You know, like people weren't really putting money into the space, and sentiment was kind of downbeat, as you could expect, given that we were talking about early 2023. This year, I mean, the vibe was definitely very vibrant. Everyone was super excited. You know, like you heard the phrase, like, we're back a lot. So, I mean, it was kind of great to just be in that environment.
And please tell me there weren't any Lambos. I feel like we progressed if there were no Lambos there.
No, you weren't there. So I don't know. You didn't have your Lambo to drive into the
space, my VW Golf. I'm not sure it would work so well in the snow. But as and when, if and when I ever get one, maybe I'll bring it along. Anyway, glad you had fun and good to have you back. Before we get into the show, quick admin, don't forget to like and subscribe to the podcast. If you are watching on video, you can scan the QR code. If you're listening on Spotify, Apple Podcasts, etc., all of that information is in your show notes. Amazing. All right, now we've got all of the agenda and admin out of the way. We'd love to welcome our very special guest today, Jesse Pollak, base contributor #1, a true crypto OG. And Jesse, I think you've been at Coinbase, is it now 8 or 9 years?
It's about to be 7 years. So it's 7 years on March 13th, okay. Which is coincidentally the day. It's coincidentally the day that blobs go live and that base fees are going to go down really, really significantly. So it's a nice little 7-year anniversary gift.
It's as if you planned it. So you've had a ton of senior roles in the business. Right now your focus is on base, which we're going to spend a lot more time on in a second. You've also been head of retail, and I think your official title is VP of Engineering, but I prefer base contributor #1. I think that's a lot more exciting personally. Now, you've just got back from Denver. Just looking at your Twitter feed, it felt like you were pretty busy over there. And that's what we're going to spend a lot of the conversation today, and as well as getting an update on Base and our new smart wallet. But maybe just to kick off, if you could just give us a quick overview of what your role entails as Base contributor #1.
Yeah, absolutely. So I joined Coinbase right before the 2017 bull market, very beginning of 2017 on March 13th. And I spent the first 5 years of my time at Coinbase leading all of our consumer-facing businesses on the engineering side. So Coinbase, Coinbase Pro, Coinbase Wallet, I built those teams from a handful of people to a few hundred people. And that was awesome, learned a ton, I think made a huge impact. And then in late 2021, basically decided that I wanted to get closer to kind of the metal of crypto. And I think my observation was it felt like we were still too stuck in this kind of trading and speculative world. And there was an opportunity by kind of making the right infrastructure investments to accelerate the overall industry's adoption of crypto as a utility. And the framing that we kind of got in our head in late 2021 was, what if we could bring Coinbase on chain? And take the whole business that we've been building and move it from the kind of centralized custodial world that we've been building for the last decade into an on-chain powered by smart contract world. It's the next generation of crypto. And so that's what we started doing in late 2021. We didn't know exactly what that meant at first. We started with a bunch of just experimentation. We actually iterated through 4 different product ideas where we were experimenting with how can we bring Coinbase on chain. After a bunch of trying and failing and what felt like a lot of wandering in the desert, we ultimately realized that in order to bring Coinbase on chain, we actually needed a developer platform where teams at Coinbase could really, really easily build on chain and have that actually work at the scale of tens of millions, hundreds of millions of users that Coinbase really needed. And so that was the beginning of Base. And once we decided to build that developer platform for Coinbase, it only felt natural for us to open that up for everyone. And so what we're building with Base is an Ethereum layer 2, which is the best, the easiest, the most secure, the most trusted place to build on-chain applications for teams at Coinbase and for anyone around the world. We launched the testnet about a year ago. We launched the mainnet in August. And today I'd say that from a mindshare perspective, and a lot of this is kind of coming off of the backs of ETH Denver, Base is really becoming the market leader for where people are building both consumer-facing and business-facing on-chain applications. I think there's a ton of energy. From a metric perspective, we're still a little bit lower than other folks. Other L2s have been in the industry live for more than two years at this point. We've been around for 6 months, but we just crossed $1 billion of TVL. We're seeing increasing activity every week in the new year. And I think we're seeing so much excitement from builders in particular who are really building that next generation of products on Base.
Amazing. What an incredible introduction. Thank you. And congrats on the 1 billion of TVL. That's definitely a milestone.
And I realize now that you're saying that, I didn't even answer your question. What do I do nowadays? I think the easiest way to think about me is kind of like founder CEO of Base. The team itself is still inside of Coinbase technically, kind of like a labs company that's building this open protocol. Base, the protocol, is increasingly decentralizing. So we've been doing that in collaboration with Optimism. We really wanted to ensure that from the beginning, Coinbase wasn't a single point of failure. We had the kind of decentralized characteristics to ensure that Base could remain open, permissionless, and accessible to everyone. And on a day-to-day basis, I'm kind of doing whatever is required as the leader of this effort. I'm doing a lot of kind of supporting and enabling our product and engineering team, which is still really small and scrappy, but having a massive impact. I'm doing a ton of partner and business and ecosystem relationship work where we're helping folks build on Base and helping them be successful. And then I think I'm also kind of leading the charge for Base and for Coinbase and in many ways for the whole industry in telling the story of how the world is coming on chain, why the world is coming on chain, and how much of an impact that's going to have over the next few years.
Yeah, very, very cool. Yeah, definitely the face of Base, I think, how I've seen you of late. And one thing that we talk about a lot, and it really resonated with me, as you said it, was like having more real world use cases. Like we love trading. A lot of what we do is trading clearly, but I think the more that we can help people understand the value of being on chain and actually showing them with use cases and abstracting away the fact that it's on chain, like the better. And developer conferences like ETH Denver are always great places to see what's happening next. So I'm curious, what were some of the biggest like general kind of takeaways that you took from ETH Denver last week?
Yeah, I mean, I'd say the biggest takeaway for me was that there's never been this level of builder energy in crypto before. And that level of builder energy combined with the infrastructure from a fee perspective, from a wallet perspective, from an identity perspective, finally being ready is really enabling these next generation of use cases to blossom. And so, just off the top of my head, today we're seeing restaurants come on chain with products like Blackbird. They're having higher margins as a result of using on-chain loyalty and on-chain payments, happier customers. We're seeing artists come on chain, kind of cutting out the middlemen, being able to more directly serve their biggest fans, earn money from it, build sustainable relationships. We're seeing commerce actually start to come on chain. At ETH Denver, we had Girl Scouts selling cookies on chain. We had swag being sold on chain. We have social feeds like Farcaster, where people are actually starting to distribute physical and digital products through a social feed. all bought with one click on chain. And so I think the big theme for me is that we've been building for 10 years. And a lot of that building has been at the infrastructure level. But just in the last 6 months, the infrastructure feels like it's finally ready. And we are seeing that next generation of applications kind of come online, driven by entrepreneurs who are all around the world. And those applications are actually getting real users. And that's growing the number of people who are not just using on-chain for speculation, but actually using on-chain to make their life better on a day-to-day basis, really, really significantly.
Yeah, thanks, Jesse. I was one of the lucky few on this podcast actually see Base in the main convention center. So it was really nice to see it have such a big presence there. So for some of the listeners who couldn't make it, can you just give us a brief overview of the demos that Base was showcasing?
Yeah, absolutely. Base had home base at ETH Denver. That's kind of our space at every conference that we go to. We had a ton of different things going on, but I think one of the things that got me most excited was the number of builders who came through to present kind of on our stage to talk about what they were building. So maybe just to give a few highlights on that. One, we had Roberto Bayardo, who's leading our core protocol development team, come and talk about EIP 4844. Which is an upgrade to Ethereum that's going live on the 13th of March that we think is going to have a really significant impact on fees on Base. So the latest projections seem like it's going to be somewhere between a 5 and 10x reduction in fees that users are paying at the end of the day, which is going to make a lot of the stuff that already is pretty cheap even cheaper. And so that was an awesome presentation. We had a packed room, people really excited about that kind of dramatic reduction in fees that's coming. Another builder talk that I was super excited about was we had Dylan from Crypto the Game, which launched their first season about a month and a half ago. It's a survivor type game show, think HQ Trivia, but on chain. And the season 2 is coming on Base in the next couple months. And we just talked about, how did he think about building a game? How did he think about using on chain as a platform to enable that? It was a viral phenomenon. We had, hundreds of players kind of tuning in from all around the world. It kind of saturated the Twitter and Farcaster airwaves for a little while. And just hearing from him, his experience actually being at HQ Trivia and kind of bringing that to this on-chain world, I think that was really, really powerful. And then the third panel that I was really excited about, and it was one that I actually hosted, was on smart wallets, where we had all of the leading teams on smart wallets, Alchemy, Pimlico, Safe, Biconomy, actually on stage talking about what do we need to do to make smart wallets the default. And this is actually a huge priority for the Base team. We believe that smart wallets are a strict requirement in order to bring these next billion users on chain. And we're doing everything we can to make them the default, including supporting Coinbase in launching a smart wallet last week that I think is going to be totally revolutionary.
I love that. And I think that I would love to unpack more about smart wallets because I think account abstraction is going to be a major theme in this space, especially for you, the user experience. But, besides with the presentations, because I think what I really love about things like ETH Denver is just the conversations you have with interesting people. I was wondering whether you found any of your conversations particularly interesting. Was there any feedback at the event that you thought could help inform your future development strategies?
Yeah, absolutely. I probably talked to a couple thousand builders while I was there. I spent most of my time just on the ground, shaking hands, saying hello, hearing how we could help. And I think a few themes really stood out to me. One, which we're going to come back to, is smart wallets. Developers need easier wallets. Right now, the default expectation of, you want to use this app, you need to go actually set up a whole another app, get that configured, manage a seed phrase. It's just not working. And so reducing that kind of barrier to entry for developers so they can say, hey, we want someone to use our app, and then the user can just use it. I think that's going to be huge. A second big theme was on-ramps. I think folks are still feeling like there aren't good enough on and off ramps into the on-chain ecosystem. And this is a place that I think Coinbase has been a leader on for a long time. And Base is now the market leader. Base has the best on and off ramps of every L2. We are working to make them even better. And this year, I'd say that's kind of our top priority, is making it so that if developers want to help their customers get cash on chain, it is as easy as snapping your finger. Everything just works. The third thing that I think was really a theme for us was distribution. Developers are seeing that they're finally able to actually build these world-class apps, but now they need to get it in the hands of customers. And they're really looking to Base to help with this. With things like On-Chain Summer, I think we showed that we can really do that in collaboration with Coinbase. And with new products like Farcaster, where Base is the market leader from a kind of building on Farcaster perspective, I think we're starting to actually see more distribution channels. And that's going to be hugely, hugely powerful, because for the first time, we're actually going to have apps that are really well built, and then they're going to be able to plug into viral distribution through social platforms that actually allows them to grow really, really quickly. And one of the observations I'd have about that is that I think the industry is pretty kind of conditioned to this, mostly flat growth with these speculative spikes. But that's not the way that most products grow. If you look at most social products in particular, things like TikTok or Instagram or Facebook, they grow, and once they start growing, they just keep growing. And you kind of have them reach more and more customers through their kind of viral mechanics. And we just haven't really had that in crypto for a sustained period of time. And I think that's about to change. We finally have the infrastructure ready. We finally have these apps being built. We finally have the on-chain social distribution channels. And 2024 is going to be the year where we start this kind of up curve in crypto adoption. And we don't stop until the entire world is on-chain.
That sounds great. Excuse me. Question about smart wallets. Like, can you break it down for us? How are they different than, a normal wallet? I signed up for one the other day for our Coinbase Smart Wallet. And, what does it allow me to do that I couldn't do with my normal wallet?
Yeah, absolutely. Well, they're smarter, but they're really smarter in three ways. The first way is that they're way smarter at onboarding. So the default for wallets today is if you want to go use an app and you need to set up a wallet, that's going to be a whole separate process. You're going to have to go download another app. You're going to have to, get a seed phrase, which is these 12 words that you have to memorize and back up. It's going to take you probably 5 to 10 minutes to get everything set up. With the new Coinbase Smart Wallet, all of that disappears. You click create my wallet, you put in your fingerprint, your wallet's created, you can immediately go into the app. There's no separate app, there's no separate extension. You can do the whole crypto onboarding experience in 10 seconds. And that is what we really believe is required in order to bring the world on chain. So the first way smart wallets are smarter is easy onboarding. The second way smart wallets are smarter is better user experiences. So one of the things that's really powerful about smart wallets is developers can actually build integrated experience that take care of things like gas for users and take care of things like multi-step transaction flows for users. And so now with smart wallets, you can have developer subsidized gas. And so users don't even need to think about gas. They just use the app, kind of like in Web 2. And you can have developers abstract a lot of the complexity. So maybe, in the existing wallet flow, a user needs to do multiple approvals. You need to approve the transaction, the transfer, and then you need to actually make the transfer. With a smart wallet, all of that can be combined into one batch transaction. So now the user just signs one thing, and the transaction gets executed. And that makes it so every experience for customers is way easier. So the second way that smart wallets are smarter is they make user experiences better. And the third one is that smart wallets make users safer. Today, if you have a dumb wallet and you lose your seed phrase, that wallet is gone forever. You can never recover it. You can't rotate the keys. You have to be really, really careful with those keys. There's also nothing that you can do around, having multiple confirmations or having multiple signers or doing recovery. And so what smart wallets enable is they enable us to make all of that totally flexible. So you can have multiple signers to approve any transaction. You can have spending limits so that if you have to spend above a certain amount, there are controls on who can do that. You can have recovery. So if you lose your keys, you can go through a recovery flow that someone like Coinbase or another trusted party manages. And most importantly, you can do key rotation. So if one of your keys were to be leaked, you can just remove that key and add another one. And so the third way that smart wallets are better is they make users safer. And I think the thing that I'm really excited about with all three of those is I think all of us have gotten a little bit used to having to give people the talk about crypto, which is that when you set up a friend with crypto for the first time, they're all excited, they put some money in their wallet, and then you have to sit them down and you have to say, hey, that money in that wallet, you're really excited, don't mess it up. You could mess up a lot of things. And if you mess it up, it's going to be gone forever. And now with smart wallets, we're not going to have to give that talk. we can just say, hey, you can have the same level of trust in this wallet as you have in your bank account. And they're all the same controls, the same protections, the same user affordances that make it incredibly, incredibly easy for you to use. And all of that can be built in smart contracts, on-chain, open source, in a way that everyone else can build on top of. And I think this is really the last missing piece for making crypto easy to use. And it's so exciting to see Coinbase be a market leader here. The product that Coinbase launched last week, the Coinbase Smart Wallet, I think it actually leapfrogs pretty much every wallet offering on the market. I actually said on Twitter, I think this is the most consequential consumer wallet that's been launched in the last 5 years. And it's going to set the standard for how easy, safe, trusted users coming on chain can actually be.
Yeah, that sounds great, because we've all struggled with, I think, the usability of crypto at times. One question that comes to mind, though, it sounds so good. Is there anything I can't do with it right now? Like, would there be any reason for me not to use it?
Yeah, so I think one of the things that will be a little bit of a kind of journey is existing users are going to have to migrate. And so if you have an existing wallet set up, you'll need to move assets over to that. And so that's going to take us a little bit of time. But I do think that, we'll make it really easy, or Coinbase will make it really easy for customers to make that transition. And one thing that Coinbase is going to make particular easy, which I'm really excited about, and which I didn't actually mention in Advantage, is with the smart wallet, you're actually going to be able to just spend your Coinbase balance on chain. And so if you hold your Ethereum or your Bitcoin or any other asset in your Coinbase.com account, when you set up a smart wallet, you'll be able to link your Coinbase.com account. And then you'll be able to just use your Coinbase.com balance as if it was already in your wallet. You don't need to do any transferring. You don't need to manage any of the complexity. It just works. And that sort of really, really easy onboarding, I think, is going to be absolutely key to both bringing in new users and helping our existing customers actually move over to get the most out of this new platform that we've built.
It sounds like kind of we're abstracting away the fact that you're using crypto at all, which I think is so important. Anecdotally, I was using Blackbird in New York recently, and it was the first time any crypto product, I think, that was being pitched to me by the staff in the restaurant, which was kind of amazing. I think the team there were kind of all looking to get as many points as they possibly could across various different restaurants, etc. So anyway, I want to switch gears a little bit here. Another platform which has had a ton of traction, and I think you kind of nodded to a little bit around Girl Scout cookies, is Farcaster. It's one that we've been speaking about a lot recently. Perhaps you could kind of start with just a bit of an overview of what Farcaster is for those that don't know. And then I know Sid's going to have a ton of questions because he's been diving very deep into that one.
Absolutely. So Farcaster is on-chain social. And if you download Warpcast today, which is the client for Farcaster, and you open it up, you'll see that it looks a lot like Twitter. The big difference between Warpcast and Farcaster and Twitter is that, unlike Twitter, which is built on a centralized kind of single corporation managed platform, Farcaster is built on-chain in the open in a totally permissionless way. And so what that means is it means that all of the data, all of the network, all of the interactions are built on-chain and built open. And the thing that I think is most powerful about that is for developers, they can trust that the apps that they build on Farcaster are going to be there and be supported for the long term. And this is a thing that we've actually seen not be the case in Web2 social. Think back to the Facebook app platform, which Facebook was really, really excited about. They got all these developers into, and then they kind of shut off access. Or think about Twitter, who had multiple clients, and then they shut down all those other clients. Or even more recently, they started de-promoting links. So if you post a link on Twitter, you're not going to get as much visibility. And all of that is because these centralized social platforms want to control users and keep them inside of their walled gardens. The really powerful thing about Farcaster is that's not the case at all. Instead, this is an open platform. If you build a Farcaster client, you will have access to the Farcaster data forever because it is open, it is on-chain, and it's going to be kind of built into the protocol that it stays open and permissionless. If you build an app, you're not going to be depromoted. You're actually going to be promoted because those apps can be built kind of in feed. You can do all sorts of really, really powerful experiences that maybe wouldn't even be possible in the Web2 world. And I think finally what we're seeing is that there's an increasing community that's actually moving their primary social presence from those Web2 worlds into the on-chain world. And I'm a great example of this. Today, Farcaster is my primary social network. I've gone from having a few thousand followers when it started a couple years ago to over 150,000 followers today. I get more engagement, more activity from the best builders on Farcaster than on Twitter. And I think a lot of the innovation that's happening in our industry is happening there.
Yeah, Jesse, love that. I kind of felt the same way as well with Farcaster in recent weeks. I think the transition, especially the uptick, really ticked off earlier this year with frames.
Yeah,
we spoke about this in calls earlier this year as well. And Base has been at the center of the action, right? Over 75% of on-chain transactions on Farcaster are on Base. And specifically with that element, I wanted to ask, what kinds of novel use cases, especially flowing from Farcaster, are you excited about on Base, potentially with the launch of transactions via frames as well?
Absolutely. And just to give viewers and listeners a quick overview of what a frame is, if you think about Twitter, you've probably seen the poll feature in Twitter. It's interactive. One user can post a poll, anyone else can answer that poll. And that's a really powerful little widget. It lets users kind of collect input, do a bunch of things. But that's the only widget that exists in the Twitter feed. Frames are an open platform in Farcaster that lets developers build any kind of widget. So you could build a poll, and people have done that. You could also build a widget that mints an NFT, or build a widget that buys a digital good or buys a physical good or makes a donation or does a tip. Anything you can imagine can be built as a frame in Farcaster. And it uses the kind of platform of on-chain where you have built-in wallet and built-in identity to enable that. And so we're seeing a ton of really, really cool use cases. Some of the ones that are top of mind for me is on-chain commerce. I think the first one that went really viral is people built a frame that let you buy Girl Scout cookies in feed. I bought way too many Girl Scout cookies. I've been, just filling myself with Girl Scout cookies for weeks at this point, and I maybe need to take a break. But I think it was a really, really powerful example of how impactful it's going to be if anyone can build an on-chain in-feed commerce experience. So that was one big one. I think we're seeing a lot of creativity happening with frames. So one that dropped yesterday was someone built a little frame that lets you interact with meme templates and generate a meme and then mint it on chain and then share it in the feed. And so that's this kind of fully in-feed experience that lets you create new content that can actually go viral. And then I'd say the third one that I've been really excited about is what we're kind of seeing as an emerging ad marketplace, where people are saying, hey, if you do this in the Farcaster feed, then we will reward you. And so the simplest example of this is retweet this post to earn $1 of USDC on Base. Those sorts of things have gone totally viral. And that might seem a little bit silly, but the idea that anyone could build an open, permissionless interaction model where you can incentivize people in a social feed to do something, like buy a physical good or buy a digital good or take an action like sharing, and then compensate them immediately right there, I think that's going to be a really, really, really powerful primitive. And Sid, like you said, I think what we've seen with Farcaster and Frames is that Base is at the center of it. Before Frames launched, Base was probably making up about 15% of all of the transaction activity on Farcaster from a market share perspective. Today, post Frames, I think we're in the 65 to 75% range. So that means 65 to 75% of all of the transactions done by all of the Farcaster users in the world are happening on Base. And what that's telling us is that Base is becoming the home of consumer on-chain builders. The people who are pushing the edge of what's possible on-chain are deciding to do that on Base. And for me, who's been building Base for last year, who kind of had this idea of we can bring Coinbase on-chain, which can help bring the world on-chain, seeing that energy and feeling that builders are kind of gathering around us to say, this is where we are going to build the future. This is how we're going to bring billions of people on-chain. This is how we're going to change the world. I mean, I can't ask for anything more. It's so incredibly exciting.
Yes, yeah, I always love your energy. And I think what we've just described as well is super exciting. We've got the composability of Ethereum and Base, and then also with the open source nature as well, which suddenly means your ability to grow and scale is endless, which is super, super exciting. Now, as I kind of just want to provide a little bit of balance, what were maybe some of the things that we didn't see at ETH Denver that you're excited to see at the next developer conference? Maybe some of the things that we would love people to be working on and continuing to focus on to help us all move forwards.
Yeah, I mean, I think like we saw a lot of everything at ETH Denver, but I want to just see more of it. Today there's still only tens of thousands of developers around the world. And I think that over the next few years, we'll see hundreds of thousands and then millions of developers start to build on chain. And we're doing everything we can to enable that, from doing great education like Basecamp, where if you're a developer, you can learn how to build on chain. It's a fully kind of integrated lesson plan, all on chain. You can go to docs.base.org and get started learning, to making it really easy for people to start building by giving them free gas. So you don't actually have to pay to start building on chain. You also don't have to have your users pay to start using your products. If you go to Coinbase Cloud or Pimlico or Alchemy or Safe or any of these products that are building developer tools, Base will give you free gas to get started, and that's going to make it even easier for you to build. And so I'd say what we're focused on is just opening that kind of gateway so that more and more folks can kind of see what other folks are doing and then get started building.
Perfect. And then looking ahead, the rest of 2024, I have no doubt you're super busy and it's going to be an incredible year for the first 2 and a bit months or anything to go by. What are you most excited about through the rest of the end of the year, and what are you focused on?
Yeah, absolutely. A few big priorities are top of mind for us. The first is continuing to drive down fees. We have a huge milestone coming up on the 13th of March when EIP 4844 ships in the latest Ethereum release. Coinbase and Base have actually been working on that for 2 years. We started working on it in February and March 2022 because we said, hey, we need to lower fees in order to bring the world on chain. That was before we had Base and before we even had Base as a twinkle in our eye. But now, 2 years later, thanks to all the hard work by the Coinbase team, by the Base team, by other L2 teams and core developers in Ethereum, it's actually coming. And we're expecting that there's going to be a really, really significant impact to fees. We can't say exactly because it's still market-based, but we do think there's a chance that we're actually going to get sub-cent fees on Base, which would be a huge win for us and kind of get us closer to our goal of having 1 second, 1 cent transactions that enable anywhere to go on chain. So continuing to lower fees is probably the biggest priority. The second thing that's really top of mind for us, and we talked about, is making smart wallets the default. We believe that we need smart wallets in order to have users have easy, trusted, fast experiences on chain. Coinbase launching a smart wallet is a huge step forward there. The gas grant programs that we're doing that any developer can access is another big thing we're invested in there. And then we're doing a bunch of core protocol work to make smart wallets cheaper, easier, more accessible to everyone. So I'd say that's another big thing that we're focused on. The third one is that we want to make it so that Base is the easiest place to on and off ramp, so that if you're a developer, if you're a user, getting money onto Base isn't a pain. We already have really great coverage across all the centralized exchanges and the different kind of developer on-ramps, but we're going to keep pushing further. We want to make it so if you want to be on Base, you can be on Base, regardless of where you are in the world. And then the final one that I think I'm really excited about is helping bring Coinbase on chain. The smart wallet is just the beginning. I kind of think about Base and Coinbase as an iceberg. Today, most people are just seeing the top, where you're seeing a lot of activity. There's tons of energy, but there's the whole behemoth of Coinbase that's just starting to come on chain. And the Base team is going to be doing a ton of work to support those teams at Coinbase to start writing smart contracts, to start thinking about how they can come on chain to build better products for our customers, make them accessible to more people, and to change the world. And so those are the things that I'm probably most excited about for 2024.
So Jesse, obviously a lot of our listeners are going to be from an institutional space and kind of have that mindset. So if I'm an institution, how do I think about engaging with Base?
Yeah, absolutely. And I think the thing to know is that our goal with Base is to make it the center of the on-chain economy. And so if you're an institution, there's no better place to be. Base is secure, it's trusted, it's easy to use, and it's really close to Coinbase, which is going to make it really easy for you as an institution to get involved. So if you're a Coinbase customer, I highly recommend you talk to the Coinbase team. You can use our new institutional Web3 wallet to deploy capital on Base. You can use our custody and prime tools to save your assets on Base, to send money to Base. And what we're seeing happen on Base right now is that there's a really, really burgeoning economy starting to form. Just in the last few weeks, there's been a ton of energy around trading on Base with things like Aerodrome, where we're seeing on-chain trading really, really start to go viral. We're seeing lending and borrowing and saving on Base. We're seeing real-world assets start to get deployed on Base. And I think people are starting to imagine Base kind of as the default for real-world assets, given all of the closeness with Coinbase and the trusted reputation. And so I guess my call to action is, if you're an institution and you haven't gotten on chain yet, now is the time. Base is a trusted platform. You have an incredible partner in Coinbase to help you navigate it. And if there's any way I can help, I'm here to help as well.
Okay, thanks, Jesse. Yeah, I will say that real world assets on chain is certainly an area that people have been very excited about, and through the whole kind of 2023, early 24, it's certainly come up a lot. So great to know that Base is an option there.
It's going to be huge, and we're seeing more and more demand for Base, so I'm fired up.
Perfect. And how do people keep up to speed with what's going on with either Base or with you?
Yeah, absolutely. So you can follow us on Farcaster and Warpcast. If you go to warpcast.com/base, warpcast.com/Jesse Pollak, you can follow me. You can also go to Twitter. Those same usernames work there. If you want to get started building, you can go to docs.base.org. You can also join the /base channel in Farcaster, where we have 100,000+ builders who are all coming together every day to talk about how they're building on Base and help each other. And then if you want in-depth updates, you can follow our blog on base.mirror.xyz. For instance, we just shared a 2024 mission vision strategy there. You can read all about what we're prioritizing, how we're thinking about the world evolving, and how you can help. So those are a few great ways to get involved.
I love it. Well, we've got our homework. So it's check out that smart wallet, sign up for a Farcaster account, and buy some Girl Scout cookies by the sound of it.
I love it. Thanks, y'all, for having me on.
Amazing. Thanks so much, Jesse. Really appreciate it. Wow. Well, a ton going on in the Base ecosystem, and great to hear from Jesse about what was going on at December. Back to markets. It's been a super, super busy week, as I'm sure everybody has been checking their trading view or their Coinbase and seeing what the price has been doing very, very frequently. Bitcoin on the week up a whopping 18%. As I look at the screen now, it's a little bit lower. We have actually touched all-time highs, according to Bloomberg, and I think on Coinbase Prime we hit 69,324. So it feels like we have a new all-time high, which is amazing. But we're a little bit lower now, and who knows where we're going to trade from here. I guess one thing to note is that 98% or thereabouts of the people that own Bitcoin at this point are in profit, which is a metric that people have been keeping an eye on throughout the cycle. And there's a number of different metrics that we look at as to try and figure out the health of the market. If we look at BTC specifically, Coinbase is number 49 in the App Store. Robinhood has also been charging up the App Stores, two kind of primary places where people are getting access to Bitcoin, Ethereum, and others. ETF products are trading a huge amount and setting records day after day after day. The iShares iBit ETF is now north of $10 billion comfortably, which I think is one of the fastest ever to have got there. So in terms of like excitement around BTC and positive narratives, it continues to go up and to the right, which is amazing to see. I guess one thing, just as we kind of touch upon kind of flows and open interest, I would love to bring in Greg just to kind of talk on this a little bit more closely. Greg, I know you keep a very close eye on all things derivatives and have got a finger on the pulse when it comes to flows. Like how are you thinking about the setup for Bitcoin and maybe that 18% movement over the last 7 days?
Yeah, so I'm probably one of the few people that's somewhat happy to see this price a bit softer today. We're all bullish, but we don't want to get there too fast, because then too much leverage can get built up in the system and just create problems for people. And that's one thing we've been keeping a close eye on. We've mentioned it, on this call in the past, is just watching both perp funding rates and open interest. Because they've been incredibly elevated, over the back end of last week and early this week, and even right now. It costs about 50 to 60% annualized to hold long exposure in the perp market. So obviously very expensive. Now, that cost is perfectly fine when we're going up, 2, 3, 4, 5% a day. But once that upward momentum stops, that cost becomes onerous, and a lot of length can leave the system. Now, one thing that's interesting about the sell-off today is it looks to be mostly spot driven. I have a slide, if we could bring it up. So top slide here obviously shows the price of Bitcoin. It did hit that all-time high that you mentioned, Ben, and then quickly sold off about $5,000. Interestingly, though, I saw this and I immediately went and checked the perp market, and we didn't see funding rates come down very much. And really, you can see the second graph here is open interest. We really haven't seen open interest come off very much. Similarly, basis hasn't compressed like it did after the sell-off when the ETF first launched. So all of this, really tells me that this is a spot-driven move at the moment.
It's so interesting that these moves are spot-driven, because I think in the past it's been so much more normal for it to be a derivative-driven move. But I think with a lot more of the volume coming to US hours where we've got ETFs trading, spot seems to be kind of leading these moves, which is super interesting. I guess, Greg, if we just kind of step back a little bit and we think about the structure of the ETF, a couple of things we've been talking about is 13F filings and when they come out, as well as when the wirehouses might be live. Like, I guess, what are you going to be looking for come, May 15th, when we do see those 13F filings?
Yeah, so a nice feature of the US equity market is they have this thing called a 13F. And if you're a money manager and you manage over $100 million, 45 days after each quarter, you have to file and let the SEC and others, it's public filing, know what you hold. And these ETFs will be 13F products, so they will have to be disclosed. So basically on May 15th, we'll be able to see, who owns these things, or who owned them at least, on March 30th this year. And I think that'll just be a really interesting window into, who's bullish on Bitcoin and crypto.
Yeah, that makes a ton of sense. I think another important date that we're going to be keeping an eye out for as well is April 10th, which is 90 days from when these were listed, where potentially some of the wirehouses can start to list them. I guess what we've already seen is that some of the wirehouses are already starting to let their clients trade these products. And I think that's partially because the volumes and the AUM have just far exceeded what were expected. But Greg, do you think it's fair to say that at that date, we could potentially see the addressable market of these products open up even further?
Yes. I mean, it's certainly, I've talked to some of my, friends that work at these places, and some of them right now are able to be offered, but only on a non-solicited basis. So the financial advisor can't go and suggest that they invest in the product, but if the client wants to, it is available. But certainly, as they become, more widely available, that'll only be better for the space. I think Bitcoin competes obviously against gold in a portfolio. And for, millennials who are about to inherit, I think, $90 trillion in wealth is the number I saw. It's staggering. And Gen Z and everybody that comes behind them, it's an easier conversation to have with your financial advisor. Okay, this is my portfolio. Should I own any Bitcoin? Maybe, maybe not, maybe 1%. And kind of as that pool of capital opens, it's certainly positive for the price action.
Yeah, 100%. And if we go back to our slide now, we've got the market cap BTC around about 1.3 trillion. And what's interesting, ETH has underperformed on the week, but if we look at today, where Bitcoin's trading down 6% as we speak, just before 2 p.m. Eastern, you've got ETH, which is actually holding up pretty well, only down about 1%. And then if we look at kind of DeFi Pulse Index, which is quite often highly correlated with ETH, it's lagging behind quite a lot, only up 9%. Sid, would love to kind of bring you in here. Like, ETH's obviously had a big rally, and David actually would love to get your opinion too. We've had a big move higher this week. Sid, from your perspective, how much of that is to do with what's going on chain? And are we seeing a pickup in fees and TVL and things like that?
Yeah, quite a lot of obviously, ETH is central to so much of what's happening on chain, especially with L2s, where it's often the base currency for fees. But currently on mainnet, it's pretty exorbitant to even do a simple ETH transaction. Just some numbers off the top for current gas rates. To do an average ETH transaction is going to cost you $10, and then to do a normal token swap on Uniswap is $120 to $150 on average for this entire week, and to bridge or to borrow on DeFi is going to cost you anywhere from $50 to $100 right now. So pretty exorbitant on ETH mainnet, and then on L2s as well. Fees are slowly starting to creep up, but that hopefully gets lowered dramatically with the launch of the new ETH upgrade next week, as Jesse was mentioning earlier in the call.
Awesome. And David, maybe what are some of the other reasons for the move higher, do you think, outside of kind of on-chain activity?
Yeah, I think that part of the rationale we've been seeing is that actually a lot of people were concerned about the upcoming Denkun fork, for example, in terms of being potentially dilutive to Ethereum mainnet because it could potentially attract more activity onto the L2s. Now, I think this is a reminder about why the L2s are necessary. So I don't think that the story itself has changed. It perhaps has shifted a little bit in favor of ETH. But I think the other thing to think about are the spot ETH ETF applications. We've been seeing that the SEC is kind of expressing their concerns here around, the proof of stake mechanism itself and whether that makes it vulnerable to some extent. But I think that overall, I'm not necessarily concerned that this means that the probability has gone down. I still maintain that I think the odds are in favor of seeing spot ETH ETF applications approved probably on May 23rd.
Interesting. And David, do we think that's going to be any staking ETF? And I guess the follow-on question there is, if it's not any staking ETF, is that going to be interesting to people?
I think it's very unlikely this is going to be a staking ETF, but I do still think that this could be interesting. Now, it's not going to be the same kind of value prop that people have for Bitcoin spot ETFs. And a big part of that has to do that Bitcoin tends to be viewed now by a lot of institutional clients as a macro asset, whereas I think the education around ETH is still somewhat limited. I think that many people still have a tough time kind of wrapping their heads around what being on-chain means necessarily. And, what is a Web3 application, for example? Like, why do we need it? What are the competitors to Ethereum, for example? So I think that until that kind of gets cleared out in people's minds, the flows that I'd be expecting into a spot ETH ETF would definitely be a level below what we've seen into the spot Bitcoin ETFs. But still, just having that vehicle for people to express a view on the on-chain side of things without having to trying to open up a new account that they might not be familiar with, things like that. I think that's going to be hugely important.
Yeah, that makes a ton of sense. A couple other tokens just to go through real quickly. The big move this week. So Arweave up 71%. That's off the back of a deep in an AI narrative, and it's outperforming on the basis that it brought AI models into its smart contracts. And then Solana has had a very, very big move, up 25%, up to 141. That's definitely benefited from the increase in both TPL on DeFi, but then also NFTs. It's a very kind of retail first platform, at least it was in the last cycle and seems to continue to be so. And within that ecosystem, we look at a token like Bonk, which is up 122%, SHIB, Floki up 265 and 184 respectively. Sid, and I'm going to ask you in a second, David, so I'll give you a bit of time to prep your answer. Sid, meme coins, they've had another super strong week. What are you seeing on chain?
Yeah, I related to the earlier point about gas fees, being up quite a lot. Memecoin has classically been the domain of the retail kind of speculators on chain. It's been a huge focus of interest, and a lot of the meme coins of historically have been launched on Uniswap v2, which was a very simple to use DEX that primarily lived on ETH mainnet. While it's been ported to many of these L2s right now, a lot of the largest memes that we have today were launched on Uniswap V2, SHIB and Pepe, for example. And so as gas fees have crept up quite a lot, we're seeing a lot more of the action flow to other L2s and L1s like Solana. We saw memes like WIF and Bonk really pop up and grow quite a lot over there. So, flows are flowing to places and venues where it's cheaper. And that's kind of the activity that we're seeing on chain as well, especially with memes.
Got it. And David, your turn. This is a super tough question. How do you value these memes? How do you think about it from like a research perspective? It's super tough, but curious to hear your thoughts.
Yeah, I'd say that the meme coin sector as a whole is mostly speculative in my mind. But that doesn't necessarily mean that you can't buy them or make money on them. In fact, if anything, unless you have a very clear thesis about why you're betting against them, it's still very difficult to actually take a short position here. So even though I think there are kind of critics about the meme coin frenzy, as it were, unless you have a clear thesis about this, I wouldn't necessarily take the other side.
Yeah, I 100% agree, David. That's definitely a tough trade to get behind. But moving to things which are not as speculative and are based on hard data, David, macro next week, we've got a couple of important items on the data side of things. Do you mind just running us through what to look out for there?
Yeah, I'd say closer to home in the U.S., things I'm watching, non-farm payroll is going to be important on this Friday. We also have Jerome Powell speaking in front of Congress on Thursday. So I think that's worth watching. Not because I think he's going to say anything particularly, earth-shattering with regards to monetary policy, but I think that this is still something people are observing. I mean, overall, I think we are in a new paradigm as far as the U.S. economy is concerned. I think that we are in a technology-driven productivity boom, and so long as that remains the case, I'm not terribly worried about the path of inflation, for example. If anything, I need to be betting on the path of activity growth. And I think that, in part, is what we've seen as far as crypto rallying. But I would still be cautious about what we're going to get for the US CPI next week. If that print happens to surprise to the negative side, I think certainly it could interrupt kind of the moves that we've been getting like across all risk assets. Moving away from the US, we see that in China, they just announced that they are maintaining a 5% growth target for 2024 in line with 2023. That's interesting because they also announced earlier this week that they are going to put out ultra long-term special bonds worth around 1 trillion yuan. This has only been done during previous extraordinary periods, like the Asian financial crisis back in 1997, the global financial crisis, the pandemic in 2020. And it's kind of revealing whether there's actually concern sitting on them versus why they are putting out such a strong target. I think trying to reconcile those two things is still very difficult. But we've mentioned on this call before that you really need to be paying attention to China because that's very likely going to dictate how like the world global growth forecasts are going to appear.
Great, thank you, David. It's the macro is still so important to the space. We kind of forget that we've moved up very quickly, but if we get a change in the outlook for rates or inflation, we could potentially retrace just as quickly. That's great. Thank you very, very much, David. Anything else you want to add on the research side? I know you had a USDC note out this week. Can you give us kind of a quick overview of that?
Yeah, thanks for plugging that, Ben. So we just published a report called The Resurgence of USDC. And before we kind of get into the ideas behind USDC itself, I would say that stablecoins are hugely important to look at because really they're an indicator of the health and liquidity of the entire crypto ecosystem. And right now, it seems like that health is good, which you can imagine be true given the rally we've been seeing. So the overall stablecoin market cap has increased around $142 billion. Of that, we've seen that the division still favors Tether, but USDC has been cashing up very quickly. So since the start of the year, we've seen that supply of USDC has actually increased around 18% compared to Tether, which has increased around 8%. And I think that trend, that direction of travel is probably what is most important to pay attention to because there are important geographical differences between USDC and USDT. Now, I would say that a big part of it has to do with who is using this stuff because historically, USDT tends to be used more in offshore markets. And because perp still represents around 3/4 of all the centralized exchange activity that actually happens, it has taken the lion's share of that activity, and it kind of makes it more sticky. But we are seeing that USDC is making large inroads in that. So we have seen that, for example, since the start of 2023, the amount of actually perps opportunities, perps volumes that actually include USDC as the base pair has actually increased by 5x. Now, that said, it's still talking about like single digit numbers. So it's still fairly low because, Tether, we're talking about global centralized exchange activity, still occupies around 83% of that. USDC, on the other hand, occupies 4% of that. But that is a very sharp increase. So I think that that's what I'm be paying attention to, because I think we could start seeing these kind of geographical shifts start to become very important in the next cycle.
Yeah, and that makes a ton of sense. I'd say it's great to see the volumes growing on our international exchange. Continue to have record-breaking days, which is amazing. Cool. Thank you very much, David. Sid, moving to on-chain, a section that we've actually just renamed as a result of one of Jesse's tweets. So what's happening on-chain?
Yeah, quite a lot. On-chain's been very busy. A lot of activity happening across mainnet, layer 2s, other layer 1s. Obviously, with prices going up, activity volumes on dexes have increased. DeFi TVLs are at highs not seen for years, and interestingly, NFT activity is also picking up. This past week saw the second largest sale of a CryptoPunk at $16 million, which is substantial. For folks viewing this via video, you can see all the prior sales, all were ranging in the few hundred thousands, in that range between 100K and 300K, and this kind of absolutely blew this out of the water. Was extremely surprising, but it also kind of marks a little bit of return of attention towards the NFT ecosystem. Some of the large projects like Bored Apes, Pudgy Penguins, and CryptoPunks have been seeing volumes that are significantly higher than they were last week, kind of leading the charge over here as well. So volumes up across the board, TVLs up, and on-chain activity up.
Good. Yeah, we're definitely seeing some of the higher quality ones rally. So I'm curious, if you look across the whole NFT ecosystem, is everything moving, or is it really just the stuff at the kind of top 5%?
Yeah, it's a bit more front loaded with the leaders kind of taking the brunt of the move forward at the moment, but which is interesting against the backdrop of meme coins and attention, right, flowing to these different ecosystems. Really interesting to see how the rest of the NFT sector picks up. Last week also saw the launch of Blast mainnet. Blast is made by the same developer behind Blur, the NFT trading marketplace. And the kind of pitch there is potentially to link the two more closely together, to have a more seamless NFT trading experience on the layer 2, on the Blast layer 2. So we'll see how that changes the landscape for NFTs and whether they make a revival altogether.
Interesting. And we spoke about Base obviously earlier on with Jesse, and I know you're kind of active across a number of different chains. What is TVL looking like and activity looking like across like a broader spectrum of chains? So ETH, EVM, L2, Solana, Monolithic, etc.
Yeah, I mean, it's up across the board. Base has over $1 billion now. Arbitrum and Optimism are kind of leading the charge at the moment. Obviously, a big factor here that potentially we can see a turning point is next week with the Denkun upgrade going live. L2s should have up to a 60x reduction in fees, and so potentially we see more capital migrate over there, especially in light of the extremely high mainnet fees, and more activity and more TVL as a result. We'll wait and see based on the on the data after the upgrade. And then Solana TVL is a little bit is growing, of course, along with the rest, but not quite as large as some of the L2s. More of it is driven by appreciation in the actual assets, like meme coins like WIF and Bonk, which have gained hundreds of millions of dollars of market cap in a few days. So, yeah.
Very cool. Very cool. Well, yeah, a ton going on, a lot to keep our eye on, and meme coins continue to go crazy, which is always a sign that retail are maybe getting a little more involved in the market. I guess one thing that's kind of interesting is that looking at Google Trends data, that's actually not picked up as much. So while from an App Store perspective, Coinbase and Robinhood and others are much higher, it doesn't seem to be everywhere yet from a kind of a social and other data perspective. But anyway, lots more to keep an eye on through the week. Thank you very much, Jesse, for joining us. Great to have you on. Thank you, Greg. Thank you, David. Thank you, Sid. Thank you to our fantastic production team. And good luck out there. And next time we speak, hopefully we will say it's all-time highs and we're above the all-time high as opposed to just below. Anyway, have a good week. Take care.